let's take a look at inflation. As that headline crossed earlier today, I'm just wondering, do you see at all the possibility of inflation re-emerging as a threat to the Philippine economy?
Well, there are sources of inflation last year, and we believe for the coming year are really two sources. One is food inflation, and what drove our inflation rate last year was the price of pork. We were hit by African swine fever, and actually what the government did was we opened up the imports of pork, and that mitigated the rise of prices of pork, and that's why we have a lower inflation rate for January. However, we're looking at the prices of fuel and watching it very carefully, and we are anticipating the softening of fuel prices, and I think that will be good for our inflation outlook.
Inflation continues the biggest worry for central banks around the world. The Fed getting ready for a lift-off. We saw the BOE raising rates yet again. I'm just wondering, given expectations of tighter financial conditions, can the Philippines remain or keep its loose monetary policy?
Well, at the moment, as we have announced, the Philippine government has actually reduced its debt from our central bank from 500 billion pesos to 300 billion, and that's about 5.9 billion US dollars, and we expect to pay it by the end of this year. Of course, we are watching very carefully the trends of interest rates around the world, and we do, however, are confident that we can handle some increase in interest rates since our interest rate payments as a percentage of our GDP are quite a bit lower than those of our rating peers, especially our neighbors in ASEAN.
You talked about how you are comfortable with some increase in interest rates. What might that level be?
I'm not going to predict that, but essentially, we do anticipate tightening and rate increases, and we are not that worried unless, of course, they start spiking abroad. But I think that's not likely.
Is the Philippine government intending to, I guess, raise more funds overseas? Are there plans for that in 2022?
Yes, we are. But our borrowings, our plan for borrowings for next year are basically we're going to depend on our domestic market. And the Philippines maintains its strong international presence by issuing global bonds in multiple hard currency markets such as US, Japan, and China. However, as I said, it's going to be around 75-25 in favor of the domestic debt market.
So we're looking at Panda, Samurai, Euro, Dollar, bond sale. Can you be a bit more specific, Secretary Dominguez?
Well, in the immediate future, we are looking at issuing about $500 million US in green bonds. But again, we are waiting to see the favorable market conditions for that.
Earlier you talked about the Philippine debt. How do you think the debt is sustainable?
Well, I believe so. You know, our total debt to GDP at the end of the year was at 60.5% of GDP. And that's, of course, much higher than what it was in 2019, which was 39.6%. However, if you net out our internal government debt to government agencies, it's only at 54% of GDP. So that we still have it's sustainable, and it is basically within our rating peers range.
When it comes to debt to GDP, when do you see that level going back to pre-pandemic level? What is realistic?
We think by the end of 2020, by the end of 2022, 2023, we will start seeing a moderation of our debt to GDP ratio, because we expect a fairly high GDP growth rate, and that our tax collections are going to be much higher. In fact, this year, in 2021, our tax collections were already 9% over those of 2020. And by the end of this year, we will be at the levels, at pre-pandemic levels.
So higher tax collection, does it then mean that you won't need to plug revenue leaks? Are there plans for that?
Well, at the moment, as you know, we only have about 5 months left in this administration, and we are certainly working to get a fiscal consolidation plan ready. And my goal is that by the time we hand over to the next administration, we will hand over to them a file-ready fiscal consolidation plan. I mean, filing to the filing legislation, yes.
The Philippines has been pretty reliant on remittances. Any forecast, any outlook for 2022? Because we know remittances have been hit by the pandemic.
I'm sorry, our remittances were actually up 5% last year. In fact, the first 11 months, we were up 5% from 2020. So our remittances are healthy, and they are, and we expect it to even rise by maybe 3% more in 2022.
We know that the Philippines have an economic liberalization plan. Talk us through how that might play out for the economy.
We already have passed, this legislature has already passed the 3 liberalization laws that we proposed. These are the Retail Trade Liberalization Act amendments, the Foreign Service Act amendments, and the Public Service Act amendments. The last 2 are awaiting the signature of the President to be signed into law. The Retail Trade Liberalization Act is already a law.
All things considered, are you confident the Philippines can meet its growth target for the year?
Absolutely. We are very confident that we will hit between 7% and 9% this year. Last year, we actually exceeded by a little bit our projections. We hit 5.61%. And the fourth quarter, we were already at 7.7% GDP growth. So we expect, as we open up our economy and as we are able to handle the COVID pandemic, we will certainly hit between 7% and 9% of our GDP growth this year.
The concern is longer-term economic scarring. What is the government doing to ease that concern?
In my view, the long-term scarring actually was in education. We had virtually almost 2 years of homeschooling, as it were, online schooling, and I think that is not that's not as good as face-to-face studying and going to school. So I think that's going to affect us in the future. However, we are working with the Department of Education on a catch-up plan to make up for those years of, how would you say, less than ideal learning systems.
Secretary Dominguez, before we let you go, I mean, the Philippines has a ballooning debt issue. I'm just wondering whether you've been in touch with credit ratings agencies to talk them against downgrading the Philippines.
No, I'm meeting with them tomorrow. Next week. The credit rating agencies next week, and we will explain them. We will explain our situation and our plans and the achievements that we have made, particularly in the opening up of our economy. You know, this Duterte administration is the first administration that really has passed economic restructuring laws that have been pending for more than 25 years. As I mentioned, the Public Service Act amendments, which opens up investments in public by redefining public utilities as public services. We've opened up investments up to 100% for foreign investors in most of the areas. Our Foreign Service Act amendments are certainly very good, and our Retail Trade Acts are going to attract a lot of investments. This is on top of the amendments to the Rice Tariffication Act that we have.